Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the short-term price action following yesterday's economic news as well as our macro charts. We discussed in yesterday's video that although we saw a nice rally toward the upside, it has not yet been enough to validate and confirm the fact that we are going to move higher. We still need to see a breakout of the overall downtrend on the weekly chart, as well as some critical levels on both the weekly and daily sustainer support. Until then, the risk of continuations lower still ever loom above the head of the cryptocurrency market, and we're going to be discussing the consequences today of potential losses of these significant levels as well as the short-term charts in extensive detail. Before the end of today's video, you'll have a very detailed and comprehensive analysis of not only the macro but the short-term as well as a detailed plan in regards to how to navigate the current climate and what to expect if the best case and worst case scenarios play out. Now, before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us over in the VIP community. To join that community, you need to contact our admin, and to do that, you can do that via the pinned comment in the free channel by clicking the contact detail here. You can find an entire 50+ month trading track record by clicking the first link, or the second link to show you a 10-minute clip inside the VIP channel. You'll get access to trading setups with exact entries, targets, stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats with over 700 members, from the general chat to the trading chart and education chat to the help, news, trade setup, and daily community setup chat. If that is what you're interested in, go ahead and check that out, guys. We'll see you in there. Let's dive into the content. So yesterday we talked about how the FOMC meeting occurred, how we saw an interest rate pause, and how the overall tone in the meeting following the interest rate decision was slightly more to the bullish side, although they were very clear that they were playing the wait and see game, not really removing the uncertainty we have seen through the last few weeks, but giving some light at the end of the tunnel, hopefully. Now, with that, we did see the market rally toward the upside very slightly for both altcoins and Bitcoin, pushing as high as around 87,900. We have now seen the market correct, and in yesterday's video, we discussed that with the rally toward the upside, we saw a breakout of that RSI downtrend, which was one of the three things we were looking for. However, and we said, and I quote from yesterday's video, that a lot of people were not going to like what I was saying, and that was that I didn't think that this move upwards was enough to confirm we are going to go higher. In fact, I said specifically, looking at the 3-day chart, we were actually coming to a level of resistance here in the 3-day, which was our prior high, and this was represented by the horizontal resistance at 87,200 up until that change of character level at around 89,000. This entire region here is an area of high time frame resistance that we rallied up into. And I've said that this was not the region you want to be taking new entries in. In fact, this is a potential rejection zone for the market. We have actually seen a pullback occur over the last 24 hours following an inability to sustain above this high. We'll come back and discuss this in more detail in just a moment. Moving over to the weekly chart, we have still got the significant level on the RSI, which is going to act as a major leading sign of a potential further correction, as well as some invalidations, as is the 50 EMA, and of course our downtrend on the diagonal. We've also got some key levels on the short term, represented by this diagonal uptrend we have established over the course of the last few days. We'll be discussing this in more detail in just a moment. Market data, 24-hour volume down 20%, 161 billion over here. Liquidations down 43%, 200 million. 145 million coming from longs, 55 million coming from shorts. The DXY has opened up green for the week, pushing slightly toward the upside, 103.7. Again, as it has retested a critical area of support represented by our midline of the broader channel. Expecting reversals to develop from here. However, if we fail to do so, we could see corrections all the way back down to our channel low. This would be the best case scenario for risk assets and should facilitate a continuation upward for the broader markets. However, a reversal over here may be as a consequence of developing uncertainty around future interest rates and of course the uncertainty around how tariffs develop moving forward. Looking at the S&P 500, we can see the S&P 500 has had a green week thus far with 21 hours remaining on the weekly candle close. The best case scenario here for the S&P 500 on the weekly is going to be a bullish engulfing candle. We really need to see this current weekly candle break back above and engulf the prior. By doing so, this could mark a reversal is pending for the following week. Until then, we are retesting what was once support as an area of resistance. We are sitting slightly above the 50 EMA, which is a good sign. But again, we need to break above this horizontal to confirm we are going to continue upwards. Until then, we do run the risk of further corrections back down to 5,300 while we are underneath this RSI downtrend, representing overall decreasing and falling / negative momentum. That is the broader market updates, guys. Let's go ahead and jump into Bitcoin. Now, before we do, if you want to support the content and support this channel and even support yourself in your trading, sign up and trade to the exchanges where I trade on: BitGet, BitUnix, and BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees, which can build up to 45% based on your individual trading volume. Again, you'll support me making the content and you'll support yourself. Check out the ad. We'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, MegaWhale team, let's go ahead and get stuck back into it. And we are starting on the higher time frame charts and then breaking it down to the short term, discussing absolutely everything you need to know. Let's first and foremost talk about the RSI. Now, the RSI has a few key levels we are watching, and I've been seeing more and more people talk about this horizontal level here at 44.62 now over the last couple days. We've of course been talking about this for quite some time because it is a level of major significance. And the reason it is a level of major significance is because it would represent a massive momentum shift if we were to drop back below it. Now, the reason I say that is because if we look at the last 2.5 years of price action, essentially if we go all the way back to January 2023, when we broke out of this major falling wedge structure, a bullish reversal pattern at the end of the macro downtrend, what we saw here was upon the breakout of that level, we saw the break of the 44.62 level on the RSI. Now, at the time, that was not a level of significance on the RSI, but what we saw develop over the course of the next 2 years was 2 retests and bounces from the exact level. With these retests and bounces, we saw eventual and strong continuations toward the upside, and the period of which we retested was always at the end of a consolidation. The first one being a horizontal consolidation, the second one being a descending channel formation. With both of these consolidations, we had downtrending momentum into the 44.62 level, followed by a breakout of the downtrend, the RSI, representing a positive momentum shift, facilitating an eventual continuation higher. We are seeing the exact same thing occur again. The only question is, are we going to see that weekly momentum shift upwards and thus a continuation, or are we going to see the 44.62 breakdown, representing that the momentum we have had throughout the course of the last 2+ years since the breakout at around 20,000 has been shifted negative? If we do see the RSI drop below this level, it would indicate a stronger and higher time frame correction back into this 50,000, potentially even 200 moving average level would be expected. So that is why this is of utmost significance, and we are watching it incredibly closely moving forward. We also have the 50 EMA. Now, the 50 EMA is a level of which we have sustained above primarily since around about September 2023. As we can see, the 50 EMA has also been a point at which we've retested. On the prior occasions, we have retested the 44.62 on the RSI. So we know that the 50 EMA could act as a leading sign that the RSI may close below the 44.62. The reason I say it may act as a leading sign is because the RSI works on candle closes, so only upon the weekly candle close would we get confirmation that the RSI would close below, but the moving average doesn't work on weekly closes. It develops in real time. So we could see the candle drop below the weekly prior to the RSI closing below, and thus it could act as a leading indicator that the RSI will fall below and close below. So we're watching the 50 EMA as a leading sign of a general strength shift on the higher time frame. Furthermore, if we take a look at something like the Gaussian channel indicator on the weekly, a loss of the 50 EMA would result in another retest of the upper band of the Gaussian channel. The prior time we retested the upper band, we saw a nice reversal develop from. However, the prior time we retested the Gaussian channel upper band, we were sitting above the 44.62 on the RSI. Now we know that the upper band is actually sitting underneath the 50 EMA, and we know the 50 EMA loss would result in a loss of the 44.62, and therefore if we were to retest the upper band, we would be retesting that from a position of negative momentum, which would increase the likelihood of a continuation through the Gaussian channel towards the 200 moving average. So the reason I'm saying all this, and the reason I've been going on about it now for quite some time, is because number one, it takes time for things on the macro chart to change. Relevant facts remain relevant facts for a very long period of time, and while they are relevant, I will continue to talk about them and remind people of them and imply the significance of them. But also, the significance of this move is massive. If we actually do see a loss of that 44.62, we see that 50 EMA lost, this will be the first time we have seen actual macro weakness in terms of not just exhaustion. We saw exhaustion develop up over here. We had these bearish divergences on the daily. We predicted this correction toward the downside. But when we're looking at like macro technical levels, these would be the first bearish triggers we would have seen on the weekly for many, many months, if not years, since 2023. So it does hold significance. It is very important we pay very close attention to it. Let's now zoom down to a 3-day chart and discuss what is happening on the 3-day. So over the past 24 hours, 48 hours, we have seen a nice bounce for the market. Now, we talked about what we would need to see for this to sustain, and we will discuss that in more detail in today's video. However, what we have seen is a bounce back into the midline of the Gaussian channel, and the midline of the Gaussian channel we know is a trigger, but also a critical resistance. But we have also seen a retest of these prior highs. These prior highs sitting around 87238, extending up to 89,000 being the prior change of character. A prior sell side liquidity, prior level of support becomes current resistance, meaning we are sitting underneath this major pocket of resistance. If we are able to break through this resistance, that, in my opinion, will be direct confirmation we are going to continue higher. Now, the reason I say that will be confirmation is because, number one, by breaking through this resistance, we will in turn also break out of the overall weekly downtrend. We will break through the midline. We will see momentum continue positive. And we would have confirmed the fact that the 44.62 and the 50 EMA on the weekly has held as support, to the point of which the selling pressure developing over the course of the last 4 or 5 weeks or even longer has been absorbed and resulted in a reversal, marking that as the bottom. Until then, and I'll continue to say this regardless of what people think, because I believe in honesty, and I don't claim to always be correct, but I claim to always remain honest, and that is more important in the market. I will continue to say, until we see confirmation, the risk of downward continuations are still present. I say it again, I'll say it one more time. Confirmation is the insurance you pay to be right, okay? It is not, what matters in trading is not about being right, it is about making money, okay? So when we're looking at the confirmation, it is sometimes better to get an entry slightly higher and miss a few percent, if by doing so, it significantly increases the probability of success and thus your ability to earn profits. Entering based on the value of the asset alone is a poor choice. The value is just a perceived value of the asset based on what the market expects it to be valued in a future period. Now, that is how it works. The market is future seeing. It is not an indication of where the asset will go in the future. Okay, so we don't make our decisions based on the value of the asset. We definitely don't make our decisions in terms of our profits based on the value. We care about the percentage change. What gives us the greater probability to get a larger and safer percentage change? That is what we care about. So confirmation is an insurance you pay to be right. Until we break above here, there is still a good probability we see continuations lower, and we'll discuss that in today's video. But upon breaking through this resistance, the probabilities massively shift in favor of this being the bottom, and thus we will see a continuation higher, and that is what we're hoping to see. So let's just zoom out one more time to a 3-day. As we know, if we break below the 3-day upper band, this is going to be, I'm going to draw a line over here just to show you where that is on the weekly. So let's jump back to the weekly chart. The 3-day upper band here lines up with the 50 EMA. So we know that the loss of the 50 EMA would result in the loss of the 3-day Gaussian channel. And what have we seen historically? Let's go back to the 3-day. Historically, when we break through the upper band, okay, we generally drop below the 3-day lower band. Now, whether or not that results in a sustained continuation or these flash corrections, we do generally see the price trend underneath the lower band of the Gaussian channel for at least a little bit of a time, and therefore we could say we are expecting still a drop below that, and thus a drop below the 50, and thus one more drop below the 44.62 on the RSI. Things to consider, things to think about, some very clear invalidations, and some very clear targets. Let's move to the short term. So over the last 2 weeks or week and a half, we have seen a nice uptrend develop with some very clear lows and some very clear higher lows developing, right? We have an uptrend developing, which is a good sign. This is essentially the first uptrend we have had since we have essentially established these highs and we continue toward the downside. This is essentially the first clear uptrend we have had that hasn't been riddled with choppiness over the last few weeks, even months. Now, this uptrend can act as two things. It can act as, number one, a launch pad for a breakout of that resistance we discussed on the higher time frame and the downtrend, or it could act as a trigger for a continuation lower. Let's talk about the trigger first. As we can see here, and we're zooming to a 4-hour, we have got, of course, underneath the $80,000 region, a significant fall off in our VRPV. And we can draw that level across over here, and we can see that we really don't have much price action under 80,000, and the price action we do have has been more or less liquidity grabs and intense volatility. So what do we expect below 80,000? We would expect similar reactions in price, where we have the VRPV dropping off, entering a low historical resistance range, and thus bearish volatility would significantly increase if the price were to drop below 80,000. So I identified 80,000 as essentially a last line of support on a horizontal scale, which could prohibit the price going lower. From a diagonal perspective, we have got our uptrend on the RSI and the uptrend on the price action. If we are able to drop below this uptrend, we would likely expect a continuation into that $80,000 region. And if we lose 80,000, we expect a continuation underneath the weekly 50 EMA. So this level here is very important if we are looking to sustain above that weekly 50 EMA and looking to keep the market in a position where it has the potential to have these higher time frame reversals. Now, on the short term, the trend is your friend until it ends, and while we are in an uptrend, this diagonal level is a support, and while it is support, it has not been lost. So the probabilities are not in direct favor of a breakdown, particularly as the momentum is still positive. If we see the RSI breakdown, the probabilities become in favor of this downward continuation. Until then, it is likely we see consolidation and chop and a gradual continuation upwards. This will be best case scenario, but even with that, we have still got to break through our $89,000 resistance. Okay, we have still got to break through our downtrend. We still need to close up those highs. There are still challenges that Bitcoin will need to overcome. But until that happens, we do have a chance at least for a continuation higher. But if we're looking at the higher time frame chart, we need to see the break out of this range. We need to see that horizontal level break. We need to see that weekly downtrend break. And it's on a clock. This can't go on forever. Remember, guys, if we take that downtrend, just do a 3-day chart here, okay? And we draw that downtrend in, we have unlimited time to do this. We eventually apex with that lower band. If we go to a weekly chart over here, I'm going to keep that lower band in on the weekly, we can see we apex of that around about mid-April, the 14th of April. So we don't have a lot of time to actually make, we've got about 3 weeks here to make a definitive move upwards, or we are going to see a broader correction in the markets. 3 weeks is what Bitcoin has, a little bit less, to make a definitive continuation higher, to absorb this selling pressure and push upwards. Otherwise, we are going to lose a 50 EMA, we are going to lose the weekly 44.62, and we are very likely going to see an extended correction. So that is it. 3 weeks, guys, a very important 3 weeks. I don't know how I'm going to convey this in any other way. Of course, I'm not trying to spread fear. I'm not trying to spread hope. I'm simply relating to you what the charts are suggesting. If you've been following the channel and you've been paying more or close attention to what I personally have done, I'm not in the market at the moment. I was in the market for essentially this entire time upwards, but I publicly flipped. Well, I didn't publicly flip, I'm not going to say I flipped bearish, but I sold everything, and my actions are a representation of my thoughts, well then yes, you could say I was bearish. I sold everything first at 96,000, that was my first target, of course, and then I re-entered, and I sold everything again at 104,000, completely exiting on the, not this one over here, on the 14th of December, 2024, and I've been in cash ever since, simply trading, and I will remain like that personally, until I believe the conditions are adequate for me to re-enter. When will that happen? Well, I think if we break above here, I may look for some re-entries. Other than that, I'm still waiting for downward continuations and playing it cautious. You can't lose money when you play it cautious, but you can definitely lose a lot of money if you jump in and risk everything without confirmation. So thanks for tuning in, guys. Have a fantastic day, and I'll catch you guys in the next one on Sunday. See you then.